All right, well, we're back for the November economic update. I'm John Cleaver, partner and senior financial advisor at Beyond Wealth Advisors.
And I'm Dennis Bacon, Chief Investment Officer.
And we're excited. It's November, believe it or not.
Yes.
We're halfway almost through the fourth quarter, and 2022 is almost behind us.
Mm-hmm.
The holidays are right around the corner, and all is well, right?
Yeah, we'll go with that.
Absolutely. Well, maybe there is some good news, maybe not. In the third quarter, the GDP, gross domestic product, production was up 2.6% after the two previous quarters being in decline. This is good news, right?
Well, we can kind of think it's not bad news, but most of the reason why that happened was because we had more exports. So it wasn't really U.S. consumption. Although U.S. consumption currently is slowing, it's still increasing over last year, but it's down to a crawl, about 1.4% or so. The service sector, all of us going out to eat and all those type of service things are still in recovery mode. They haven't got anywhere near where they were before, although they're getting close. But the negative side is construction, real estate are in major decline.
Right.
It's pretty orderly. It's not, and it's kind of sporadic across the country of where the impact is. But the combination of inflation, rising interest rates, the home mortgages are around 7% now. So that's a big issue. But the bigger issue on the relative to GDP is that consumer confidence is declining. Right. It's still in the positive mode. It hasn't really went negative yet, but it looks like it's headed that way.
So we hear that big number, but there's more to the story.
Right.
Basically.
Yeah.
Fantastic. Yeah. So we're going to unpack that a little bit more. One of that more to the story is we hear a lot about inflation. Inflation's at maybe the highest level we've seen in like 40 years. What's the economic outlook / impact on the typical consumer when we think about these heightened levels of inflation and kind of what's being done to curb that?
Right. Well, obviously they're paying more for bacon at the grocery store.
that's a big issue.
That's a big issue, yeah, and most everything else. So that's important. Kind of some interesting side notes to that, though. Inventories are really high among companies.
You see that in stores right now, too, by the way.
Yeah, they're high, and the warehouses have a lot in them. And with that, if we see a decline in consumer confidence, usually translates into less spending, which then translates with high inventories to companies giving deeper discounts. We very well may see at Christmas this year deeper discounts than we've seen since pre-COVID. It's iffy on where that'll happen, but if the consumers pull back, then we're going to see the deep discounts. And the more people fear a recession in the future, the more they'll hold back. Yeah. So you have kind of some teeter-totter effect here on this, but all in all, I think we'll see some more sales, in the next 2 or 3 months, just so companies can reduce inventories prior to a recessionary period.
All right, so then that trickles into jobs, and historically, or maybe in the past, we've really seen this a little bit, where jobs and the job situation has certainly been a harbinger to our economic future.
Right.
All right, so what's the outlook in the job market?
Well, we just had the jobs report this morning.
Yep.
Had about 270,000 new jobs added and probably around 40,000 manufacturing jobs, which is pretty high for what we've been seeing. We also had an upgrade in the job for the prior 2 months. So we actually underestimated in the prior 2 months. So that was actually an increase. So we're seeing more jobs, but the participation rate, people who are actually working, have declined. Part of that is the bills that came out in the last few years. A lot of the money went to the states. The states are now sending out more money to people, so people are finding less need to work at the lower economic levels, not necessarily in the Midwest, but in other parts of the country. And also, with that, the unemployment rate actually rose to 3.7%. It's the highest it's been in several months. Not dramatically, but it might be the beginning of a trend.
Okay. Well, we'll have to keep an eye on that one. More to come next month on that
Yeah.
for sure. All right. Well, we would be remiss if we didn't at least discuss what's happening next Tuesday, and that would be
Is there something happening
Yeah,
next
there is
Tuesday?
something happening next Tuesday. That would be the midterm elections. So, what impact, if any? Obviously, it's difficult to predict, but what impact, if any, do you see from the upcoming midterm elections?
Well, just from what I've seen on some of the polling and stuff, is that it looks like it's almost a foregone conclusion that the House of Representatives will switch parties and be Republican. Right now you have the House, the Senate, and the executive branch
Right.
all being Democrat. With that one switch, it basically shuts off a lot of legislation that cannot be agreed upon. So I think over the next couple of years, wherever we are, most legislation will be things that are common sense. We would expect it to have to happen. We would hope,
Yeah.
but
Common sense, what?
Yeah,
Political?
it's not. Yeah, not since Ben Franklin.
Yeah.
But I think that there may be some. They'll find some areas where they can work together on
Sure.
minor legislation. No major legislation will come out, and so that actually is not a bad thing. It won't really have a huge impact. It may keep us from doing things we need to do, but it won't put more
Right.
things on
Right.
or that may or may not be impactful.
Do you expect the market to react to that?
I would not be surprised we see a bit of a rally in the last, after the election. Pretty common to have a rally
Right.
after the election. Mainly it's the taking off the unknown.
Right.
The markets like to
Markets
see
like the known.
right. They like
Right.
to know absolutely.
Well,
So that's
speaking of that, one of the unknowns right now is that this isn't just a U.S. situation we're
Right.
dealing with. Probably, maybe more than ever, it's really a global economic situation that we're in. So, when you look around the globe a little bit, how do you see what's happening internationally impacting what's going on here in the U.S.?
Okay. Well, first off, on the international level, things aren't real good.
Yeah.
In China, the manufacturing indexes are down well below the expansion mode, and Europe is definitely in that same area, and Europe may be in recession now. A lot of Europe is following the U.S. lead on the Fed. Yesterday, there was a 0.75% rise in Europe, as well as there was the day before at the Fed. So I think really contraction on the worldwide basis is there. Typically, we're the last one to enter that race. Almost
Correct.
every time when this happens on a worldwide basis, the U.S. is the last one to
Right.
go into that mode, because no matter what metrics we want to use, the U.S. economy is the most stable and
Right.
strongest economy in the world still.
Right. All right. So we've talked about gross GDP.
Mhm.
We've talked about inflation, jobs, the election, what's going on in the world. So sum it all up. What's the outlook, I guess, as we think
Okay.
about wrapping up 2022 and turning the calendar to 2023?
You're talking from an
Yeah.
investment standpoint, about markets and stuff.
Yeah, primarily from the market
Okay,
standpoint.
okay. Well, the bond market has seen most of the damage that's going to happen.
Yes.
We're going to see interest rates continue to rise, and we're going to see those come up. But the reason why I say most of the damage has happened on the fixed income side is because now we're at a point where if you want to put together a bond portfolio,
Right.
actual bonds that you're going to hold to maturity, you can get a solid return in the anywhere from 4.5, 5 to either maybe up to 7% range. So most people would not be unhappy with that for their less risky money.
Right.
So that from that standpoint, I think it's pretty good. I think that on the equity sides, we're going to continue to see a really tough time. I think we're going to have some bear market rallies. I think we maybe
Right.
we're probably having one right now.
Right.
You know, we had in October. We had a great October. It's down so far this month. We're having an update today. I can see that what we're going to see is these bear market rallies. And typically, before you find a bottom, you have a series of bear market rallies. So
Right.
that I would say is certainly going to be there. You can take some opportunities if you're a trader. You can take some opportunities in that. But on the whole, I think we're in that near the bottom area.
Right.
You know,
Right.
So.
So, last question. Knowing that there could still be some more volatility, some up and downs, the real question is, do you see something significant, more like a a crash or a significant downturn in the market?
I don't really see anything significant from here on a long-term basis. I do believe that we have not reached that point in the market where we've had what we typically see as capitulation.
Right.
That means everybody that's in the market that are not experienced traders just throw the towel in and say, I'm done, I'm out of here.
outta here.
Once that happens, all the big money, people who are experienced traders that have money on the sideline, jump in. So typically what you see is you see a big drop followed by a rise that usually signals the beginning of a long-term bull market. And we have not seen that yet.
Right.
We saw it in 09, we saw it in 02. Sometimes it happens over just a few days, sometimes over a couple of months.
Right.
But I think we still have to see that. I would expect, I don't know when it's going to happen, but I would like to think
Sure.
it's going to happen in the first or second quarter of next year.
Right. Fantastic. All right. Well, that was a lot. We'll be back next month with more. It is Thanksgiving is just right around the corner, so we do want to take this time just to say thank you. Thank you for being a loyal client and for watching these monthly updates, and we look forward to continuing to serve you this year and the years to come. And as always, make sure that you're reaching out to your advisor in these times when there are, maybe more uncertainties or perhaps you have more questions. It's a great opportunity just to kind of reconnect and make sure you're on the same page and make sure you have a plan in place for how to move forward. So
I would agree, and I would say this following Tuesday, just fix some good popcorn and sit down and enjoy and watch the fireworks.
watch the fireworks. All right. And with that, that's a wrap.
Okay, thank y'all.
you.
Bye-bye.